He's a guest in Davos who's always offered us a different point of view. I have with me John Studzinski, Senior Managing Director and Global Head of the Blackstone Advisory business. John, thank you so much for joining us here in Davos.
No, thank you very much for asking me to join you.
I'm going to start by asking you a question I haven't asked anybody so far, which is that 2015 seems to be a year that will be dull and full of bad news. Is that how you see 2015?
No, I think I've been coming to Davos now for over 20 years, and I think this is probably the most interesting period because you've got a convergence of oil prices, deflation, increased political tension, geopolitical tension, and a lot of uncertainty in the world. Look at the volatility that we've seen only in the last 2 weeks, and I think this is definitely a precursor for what you're going to see the rest of 2015 and maybe 2016.
You interact with the top business leaders from across the world. What is it that you're telling them to be prepared about? What are the big shifts that you see taking place, not just in the global economy, but across the world through the course of the next 12 months at least?
2008, we had an extraordinary Great Recession, and the world handled it really well because they pulled together the right decision makers and the right economic and financial tools. We now are having a series of other problems, some of which are economic, but increasingly a lot of them are geopolitical. And we're seeing a breakdown of certain governmental structures and decision-making bodies, certainly in Europe. Look at the dysfunctional nature you have of the European community. Democracy in Europe is not working the same way that it's worked historically. You've got coalitions that can't function. You have an election coming up in the UK which may or may not produce a majority. David Cameron may not win. Ed Miliband may not win, which means they'll have to call another election in 3 months. And as you look across Europe, and I would guess if you and I are sitting here a year from now or 18 months from now having the same discussion, you might be looking at a Europe where the northern part of Europe is heavily polarized towards more right-wing governments and right-wing thinking, and the southern part of Europe is more polarized towards more left-wing governments, left-wing policies, and left-wing thinking. So this centrist oasis that we've lived with historically, that we see in the United States or we see in other parts of the world, is not really likely to be seen here. And it's going to be made worse by flat economic performance, high youth unemployment, and remember, social media is a big, bright light and shines a whole activist movement and puts it in a totally different context.
Some of what you're talking about, with regards to the polarization in Europe has to do with how the economy is doing, isn't it? I mean, the peripheral countries are doing very poorly. They are therefore naturally leaning towards the left. Would you agree with that?
I think the peripheral countries haven't really restructured successfully since 2008. The peripheral countries have a high amount of youth unemployment. They haven't been able to do a lot for economic stimulation or job creation for the broader employment group. And I think the other thing that's happened is you have a situation in these countries where the gap between the rich and the poor on the surface, again exacerbated by social media, seems to have gotten larger and larger. And look at the statistic we had yesterday, which the media has. The Oxfam report, 50% of the world's wealth is in 1% and 50% is in 99%. What actually does that say? So if you're someone sitting in Spain or in Italy or in Greece or in Portugal, and you've got someone who offers a solution, it doesn't mean you have to be too clever politically to be seen as being a potential source of hope.
Yeah. The other theme that you were just talking to me about is weaponization, and you had a great interpretation for this, which I'm sure our viewers would love to hear.
Well, I think you see a lot of chief executives and a lot of statesmen saying, well, the world is a very stable place because we haven't had any major conflicts in the world. Clearly, you had a lot of militarization in places like Afghanistan and Iraq and the Mideast. But what you're seeing more and more is this notion of military incursions. It's sort of an 18th, 19th, and 20th century model. And actually, I think what we need to think through more carefully now is the use of finance, which you saw and how the Americans and the Europeans have reacted towards instituting sanctions towards President Putin and Russia. And what that's caused is a lot of the states around Russia haven't been able to have the same type of funding, including Venezuela, Cuba. And what that's caused to a certain extent is a big burgeoning of the shadow banking system, which of course we talk about trying to control, actually by putting one constraint on Putin and putting financial constraints on Russia. You're actually almost encouraging the shadow banking system. So finance is one weapon. Energy prices. The Saudis, very focused on maintaining their market share, very focused. And there are all these sort of cloak and dagger theories that the Americans and the Saudis are collaborating, trying to sort of manage the oil price down to put pressure on Iran, Iraq, ISIS, Russia, Venezuela. That's rubbish. The Saudis are focused on maintaining their own status in the world as the world's leading oil producer, a position that the Americans in the last couple of years, because of shale, are challenging. So this is the Saudis, A, trying to assume that role globally, but B, also trying to enhance their position and make sure they continue to be seen as a dominant economy and a dominant source of power in the Mideast. So energy is the second weapon. And the third one, which we're all very naive about, and you saw this with the Sony hacking, is technology, coding, and what you and I commonly refer to as cyber terrorism. And I think everyone, and I hope the Indian government's focused on this, the ability for one government to be hostile towards another by hacking into their, we saw it the other day, hacking into the American Defense Twitter communication system, which was a bit of almost a warning, a bit of a joke, but a bit of a warning. What does that symbolize in terms of being able to hack into a major money center bank and actually cause it to cease operations for 24 hours? How does the consumer react to that in terms of consumer liquidity in the market, or the banking system have to freeze or stay put? So that's another form of weapon. So the weaponization of finance, energy, and technology, I think we have to see this is the 21st century tactics, and we have to really revise our foreign policy and our thinking more along those lines. And I'm not sure most governments prioritize it enough. They clearly do, but and I think President Obama the other day talked about this as needing to be part of Homeland Security and not necessarily something that was part of the military or the security branch only. And I think he's right. It is Homeland Security.
But John, these are big, out-of-businesses league problems.
They are.
If global business leaders come to you and say, John, what should I be prepared for in 2015? How do you take this, the key threats that you have just pointed out, and make it into something that they can sort of mitigate in some fashion? How does business navigate this?
Well, I think business, there's a whole lot of other things the C-suite or the chairman's suite has to focus on. Number one, they have to be prepared for a volatile year. Number two, with this perception of the gap between the rich and the poor, they have to be perceived that their compensation structures, remuneration structures are going to be under much greater scrutiny. Number three, we haven't talked about talent management, but I think you and I both know that the best and brightest coming out of Indian universities or American universities don't all want to work anymore for big companies. There's a big focus on entrepreneurialism, there's a big focus on small, there's a big focus on transparency, and there's a big focus on doing things that are both financially rewarding but have some social impact. So I think if you're so volatility, focusing on the perception of compensation structures and remuneration and narrowing that gap, but also talent management, realizing that the best people now are not necessarily the ones who are going to go into a majority of the big industries. Many of them want to go into technology, many of them want to work in their own businesses, they want to be entrepreneurs. So if you're a big company, you've got to try to somehow deal with those issues and to create the culture that's going to allow that talent to flourish or to feel comfortable. But I think it's going to be a very rocky year, and I don't think all these things we're looking at, like quantitative easing in Europe, and a number of things that are happening in Asia are necessarily going to stabilize the environment. And I think lastly, and I'll shut up, we have to stop looking at everything as being economically driven. There are too many issues in the world that relate to the common man. And I think one of the reasons why Pope Francis is actually such a formidable leader today, and actually I think your Prime Minister Modi is very good at this, is leaders have to speak in a way that everyone can understand them. And I think leadership of the 21st century is not about being too clever, too political. It's being very simple sentences, simple messages, and actually living the way you speak. Being role models.
Mr. Modi is very good at that.
He is very good at that, but that's what I'm saying. That's leadership for the 21st century, because social media makes it all the more difficult if you basically don't do as you say.
Yeah, fair enough. The last question I want to put to you, and I know I ought to be asking you about M&A activity. Will it pick up? Will it not? But I won't do that.
Okay.
I think, the U.S. is clearly the engine of growth right now. China's slowing down, but it's still a formidable growth center, so to speak. We've got growth coming in countries like Indonesia. Russia seems to be on the brink of disaster, some people put it. Where does India fit in on this economic growth map? Are you seeing a lot of buzz about India here in Davos? Are business leaders telling you, well, that's the next big destination I'm going to invest in as yet?
Well, you have the Modi momentum, the Modi wave, the Modi... people love new brooms, and they love personalities. But remember, Modi also has a track record. He comes with his Gujarat track record, and I think the good news is he's done this before. The bad news is he hasn't done it in 39 states, or how many states there are. And therefore, the challenge that I think the average investor realizes is he's got the right understanding, the right ethos, but at the same time, it's going to take some time. So there is clearly a Modi premium in the market, and I think that's built into the stock market. People like what they hear. He's clearly being very careful about managing expectations, but I think if I were managing expectations, I would say people are going to see a market that's going to take 5 or 10 years for the key areas of infrastructure, whether it's transport, logistics, railways, the road system, to basically function in a way that's going to allow a lot of the historical issues like transport of agricultural goods, for example, to become much more efficient. And I think once that happens, you'll see a big difference. Now, in the interim, is India cheap? And is it a cheap currency or cheap investment play? The stock market has reacted perhaps more positively than it should have, and I would say it's probably, in some cases, probably more expensive than it should be at the moment, because there is a Modi premium, but at the same time, the question is how long it's going to take to be realized. There's no question that as you look around the world, people expect India to grow at 6.5% or 7% in 2016, which will be one of the highest, if not the highest, emerging markets growth rate, higher than China for 2016, because China is expected to grow in 2016 between 6 and 6.3. And also, I don't think India has a lot of dollar-denominated debt.
No, it doesn't.
And therefore, many emerging market countries have dollar-denominated debt, which has now gone up a lot in value because of the strength of the dollar. India doesn't have that problem.
That's true.
So I think there's lots of things going for India. I think Modi is right to manage expectations, but at the same time, I think one has to pick one's spots carefully if one's investing in India. We like real estate, obviously, and we like a number of other sectors. But real estate is a good long-term play in a country like India, because there's always going to be a need for high-quality property in cities like Mumbai and Delhi and some of the other big cities.